Hello there. Welcome to Financial Accounting Info. Today, we want to look at a question from a question paper of November 2021. So, on that question paper, we're going to look at the last question on that question paper. That is question 6, and it requires us to prepare trading account, subscription fees account, and also we need to prepare a statement of profit and loss on that question. So, if we go to our question. So this is what we have in terms of our question. This is our questions 6. And then on 6.1, it requires us to complete the following ledger accounts and balance or close off the accounts. So very important to take note that they require us ledger accounts. So it means we are going to prepare our T accounts. So this is what we have. So first part, we've got tax shop trading account. And then second part, we have got the subscription fees account. 6 marks on tax shop trading account, and then 13 marks on subscription fees account. Then at the second part, which is 6.2, is saying draw up the departmental statement of profit and loss for the year ended 31 March 2021. And it has 11 marks. So this is what we have. So we have the information that we are given in terms of balances on 1 April 2021, and we've got these balances that we are given there. So if you go down, you'd see that this is the information that we have. So we can go to the next page to see what we have. We now have the statement of receipts and payments on 31 March 2021, where we have the debit side, we have got the receipts, and then the credit side, we have got the payments. So, and also on item C, we've got additional information and adjustments that we are given there. We can go through that. So this is all the information that we have according to the question. And now we can go on the first part. Remember, the first part requires us to prepare the tax shop trading account. So we can go to our answer section to see what we have. So this is our tax shop trading account, whereby the debit side we have the column for details and amount, and the same as the credit side, details and amount. So in this tax shop trading account, we are going to start with the opening balances. Remember, when you are preparing a trading account, the opening inventory comes on the debit side. This is our opening balance. It comes on the debit side of the trading account. Then our purchase account also is going to come on the debit side. Then whenever, if ever we have got our purchase returns now, they go to the opposite, which is the credit side. Then on the credit side also we have the turnover or the sales figure will be on the credit side. And then we also have closing inventory comes on the credit side. And then now, if we have got returns in terms of sales, these are debtors allowances or sales returns or returns inwards, we can put them on the opposite side, which is the debit side, whereby they are now reducing the figure for sales. So the balance that we are going to get, it's either we're going to get a surplus or a deficit. So you'd see that if you have got a smaller figure on the credit side, it represents a deficit. And then if you have got a smaller side on the debit side, it represents a surplus. So this is what we have. So we can go there and check on the opening balance, what is our figure for opening inventory? What is our figure for opening inventory? So on the question, you'd see that this is our opening balances. And for inventory, you'd see that the figure that we have for inventory, let's check there. What do we have? Tax shop trading account 4,150. So this is our opening balance that we are going to put on the debit side as our opening inventory. So we can go back there on the answer section. So we are now on the other section. So we come to the debit side and we've got our opening inventory. And then the amount that we have there is 4,140. Then we can check the figures. Remember, we said purchases on the debit, turnover or sales on the credit, and closing inventory on the credit again. So you can just go and check those figures in the question. So here, that's where we are going to get our figures. Remember, here we have got the purchases of the tax shop 10,000. So these are our purchases. And then we can also try to see if we have got any figures that should go in the trading account there. We also have, let's check, we have got our tax shop sales. These ones which are going to go to the credit. So remember, this one goes with the credit, then our purchases of the tax shop goes to the goes to the debit. We don't have any returns there in terms of sales or purchases, so we can just leave it like that. Then the other item that is left there, it means now we have to check our closing inventory, and our closing inventory, find it in the additional information. Item 1, tax shop trading inventory on hand amount to 2,800. Remember the opening is on the debit, so closing will go to the credit. So we have got this one on the credit side. So we are just going to enter these ones as they are: debit, credit, credit. So this is what we have. We can just go and put those figures. So we are here on the debit side. We said our purchases are going to come here. And then the figure for purchases is 10,000. And then on the credit side, we are having our turnover. Our turnover, which is our turnover 10,800. So we have turnover 10,880. And also we have got the closing inventory on additional information. Closing inventory, we have 2,800. And then these are the figures that we have that are supposed to be put in the trading account according to the question. Remember, you don't have any returns. If we had returns in terms of sales, they are supposed to come on the debit. Returns in terms of purchases coming on the credit. So this is what we have. Then we can balance off our accounts. So the balance is going to be a surplus or a deficit. So if remember, I said if you've got a smaller figure on the debit, that's where the deficit will be put. Then a smaller figure on the debit represents a surplus. So if you add the total of the debit and the credit, you would see that the debit is the bigger figure, and the total of the debit there is 14,140. So it could come both sides in between the double lines. And then if you say this one minus this one minus this one to get the balance here, which is going to be the deficit, you are going to get 452. So this is what we have in terms of the trading account. So we can go to the next account, which is the subscription fees account. So on the subscription fees account, subscription fees account, remember, we are going to have opening balances in terms of prepayments or advance payments. And then we also have accruals or balance owings at the beginning. So we can just give a summary in terms of what is required there. Where do you put those balances? So here we are saying this is a subscription fees account. Subscription fees account. So you'll see that if it's an opening balance, and it's an accrual, opening balance being an accrual will come on the debit side. Opening balance. If it's an accrual or an owing, come on the debit side. Then if it's an advance payment, opening balance being in advance, come on the credit side. This is an advance or a prepayment. So that's what we are having there. Then on the closing balances, we are saying it becomes the opposite now. It means this advance, which is on the credit, when it's a closing, it comes on the opposite side. So closing balance being in advance come on the debit side. So this is what we have. And then closing, when it's now accrual, come on the debit, on the credit, sorry. So we are saying here now, we are having our closing. When it's a accrual, it comes on the credit side. So this is what we have. Then you're also supposed to know that any subscriptions received through the bank, so the bank will come here on the credit side. That's where we are going to have any subscriptions are going to receive. Then an amount that is going to be transferred to the income and expenditure. Income and expenditure will come on the on the debit side. So you can just take note of this when we are preparing this subscription fees account. So this is what we have. Then we can go back to our account. So our opening balances, we are having them there at the beginning of the question, whereby we are having the accrued income for subscription fees, and then we've also income received in advance. So our opening balance, we have them. Remember, for accrued income, we said when it's an opening balance, we put it on the debit side. So 1,050 on the debit. Then we are going to put also our income received in advance there, 700 on the credit as our opening balance. So we can just go there and summarize that. Right, this was subscription fees account. So on the debit, we are just saying accrued income. Accrued income. And we are saying the figure that we have there is 1,050. Then on the credit, we have income received in advance. Income received in advance. And the figure that we have is 700. So this is what we have. Then we can go back to check other adjustments that we have. Other adjustments that we have there. We can go on the second part of the year. We have this subscription fees. We have these subscription fees that were received. They were 700, 2019, 2020, 4,550, and 2021, 2,100. These ones, you post them all in the subscription fees account. They will be on the credit side of the subscription fees account. And then obviously the corresponding entry in terms of our double entry goes on the debit side of the bank account now. So because you are receiving, you are debiting bank, then you create the subscription fees account. So we are just going to put all of them on the credit side of subscription fees account 2019, 2020, 2021. So we go back to our question, to our answer section. So we are saying on the credit here, we are saying bank. And we are saying for 2019, we have 700. Then for 2020, we are having 4,550. Then for 2021, we are having 2,100. So this is what we have there. And also we can go and check other entries that we need to put in the subscription fees account. Other entries that we should put in the subscription fees account. So you'd see that we have got subscription fees refunded, subscription fees refunded. So it means these ones we are supposed to put them on the debit side of subscription fees account. Remember, when we receive subscription fees, we credit like what it did on the bank. We credit subscription fees account. But when we are making a refund, we go to the opposite side. Now we are reducing the figure that we've received. So we go to the debit side and put our 1,400, and then let's go and just make that entry 1,400 on the debit side. 1,400. So here we are now here. We are saying this is a, you can just say bank, bank. And in brackets, you can just show the description. That is a refund, fees refunded. This is fees refunded. And then the amount 1,400. So this is what we have. And then we can now try to see in terms of the additional information. What do we have in terms of additional information? We have got something in the additional information that we are supposed to include there in the subscription fees account. You also check the additional information. So you'd see that there is something there on two subscription fees still outstanding for 2019 must be written off. Subscription fees still outstanding for 2019. We can just go and check there at the beginning of the question. So you'd see that subscription fees that we have, if you come here, this accrued income, this one, 1,050, is the one that is owing. This one, 1,050, represents the one that was owing at the beginning of the period. But we can now check what we received for in terms of those subscriptions. Then we can see which amount is still owing. So we were owing, which means the members were owing 1,050 at the beginning, and then what we received now, we compare with what we received, and then we only received 700. So it means the difference is still owing. So we are saying 1,050 minus 700. So if you check, if you calculate correctly there, you're going to get 350. So it means 350 is still owing. So these are the ones that are going to be written off. And when we write them off, we are going to the credit side and enter them on the credit side, and we are going to write our fees written off. Fees written off on the credit side, 350. So we are going to enter that entry. So we are saying here fees written off, and we are saying the amount is 350. So this is what we have there. So we can also check in terms of other entries that are supposed to be done according to the additional information. And then if you check there at the beginning of the question, we are told that each member must contribute 350 rands per year to the club as joining fee. So we know that now. Then lastly, we are being informed that 7 members must still pay their subscription fees for 2021. So what does it mean? It means these 7 are now outstanding at the end, because whatever we are having in the additional information is representing the balances at the end. So at the end, this is our accrual. This is our accrual because they must still pay. So it means it's still outstanding. So it's an accrual. So we have got 7 times 350. 7 times 350 still outstanding. So if you calculate that one, you're going to get 2,450. 2,450. So this is this is an accrual. And remember, an accrual at the end of the year, we said it must go to the credit side. So we are going to put it on the credit side. Then you also check for an advance payment, which is a prepayment. You can see it here in the recent payments account on 2021. It means this amount that was received, which is written 2021, this one is an advance payment or in advance receipt for us as subscriptions, which is 2,100. So we are going to present it again as a payment in advance on the debit side. Remember, when it's in advance, we said it's advance at the end, we said it should come to the debit side. So we don't put it again on the debit side. So we can just go there and summarize. Then after making those entries, we can now balance off. And obviously, the balance that we are going to get, we're going to transfer it to the income and expenditure. We are not going to have any balance CD or a BD. So we go there. We just summarize what we have. We are now saying, remember, we said we have an accrued income on the credit side. Accrued income. And we said we are going to say 7 times 350 to get the product that we got there was 2,450. Then on the debit side, we said we are having in advance that we are given there is 2,100. So it's received in advance at the end. So we put it on the debit side, received in advance. And we are having a figure of 2,100. Then we can now make our calculations in terms of balancing our subscription fees account. So if you add the debit and the credit, the total of the debit or the total of the credit, we see that the bigger total is on the credit side. So it means this is the one that is going to come in between the double lines. And if you calculate correctly in terms of the total of the credit there, it's supposed to be 10,850. Which is going to come on both sides. Then we are saying the balance is not, we are not going to call it a balance CD. We are just going to transfer it to the income and expenditure. So here we are saying income and expenditure, income and expenditure. And the amount that we are getting there, when you say this total minus what we are having on the debit side, we are going to get a balance of 6,300. So that is what we have on the second part. So on the next statement, which is 6.2, we have a statement of profit and loss. So on statement of profit and loss, what we are going to do is we are going to start with listing all the incomes that we have. Then we get the total. Then we list all the expenses. We get the total. Then we subtract income minus expenses to get our net figure for statement of profit and loss. So we start with income. We start with income. So we are just going to list all the incomes that we have. And then the total is going to come in line with our income here, description of income. So we will start with the subscription fees. Subscription fees. Remember, we opened a subscription fees account. The figure that we said we are transferring to income and expenditure is the same figure that we are going to put there as our starting figure. So that figure, remember, we got 6,300 on our subscription fees account. So we are just going to put our 6,300 here. And then we go to the question to check what we have in terms of other incomes. We can get them, other incomes, and get them on the debit side where we've got receipts. We've got get takings here, 7,260 is one of them. We also have entrance fees, 3,200. And then also we have the interest on fixed deposit, which is 450, is also part of income. So we are just going to list them and then we add to get the total. So we go back there and list all of them. We have our, firstly, we have our get takings. Get takings. And the amount that we have there is 7,260. And then we also have our entrance fees. And the amount that we have there is 3,200. And then lastly, we've got interest on fixed deposit. Interest on fixed deposit. Then the figure that we've got there is 450. So now these are all the incomes that we have in the question. Then we can add them to get the total that we're going to put here, which is 17,210. So this is what we have. We can now move on to the second part, which is expenses. So we now have our expenses section. So here we have our expenses. So all our expenses we are going to list all the expenses that we have. We can go back to the question to see which expenses do we have there. Remember, we have here, we go to the credit side. That's where we've got our expenses and try to see which expenses are. So we've got stationery, which is here. So one of the expenses, 300. We have water and electricity again, 1,200. We have also honorarium. This one is also an expense of 350. Then we can also check all the additional information. We've got subscription fees outstanding, must be written off. So it's an expense there. It's an expense there of subscription fees written off. And also, we also have depreciation, which is here, 15%. So on the calculation of depreciation, 15% per annum. So what are we going to do? We are going to do, say, 0.15 times the figure for it's on cost, so it's straight line. So we are just going to calculate with the cost that we are given in the question at the beginning. At the beginning is our opening balance there for equipment. So we can check what do we have in terms of equipment there. So at the moment we can go and fill in terms of all the other expenses there. That is stationery, water, electricity, honorarium, and then we also have this one that was written off. Subscription fees are written off. So we can go there and just list them there. We have remember we have our subscription fees written off. And the figure that we have there is 350. And also we notice honorarium, which is also 350. And we also have water and electricity. And our water electricity figure that we have there is 1,200. And we also have stationary. And the figure for stationary is 300. And obviously, lastly, we have our depreciation, which we want to calculate now. We have our depreciation, which we want to calculate, and it's 15%. So our depreciation, remember, we said it's 15%, and these are the opening balance that we have. And then the opening balance for equipment represents the cost of equipment. Remember, it's on cost, so we are going to say a percentage times the cost. So the percentage is 15%, which is 0.15 as a decimal. Then we multiply by the cost, which is we are given here is 5,000. For sports equipment, we've got 5,000. So when you multiply to get 750. So we have got 750 for our depreciation. So we can go back to the question. So we have 750 here. So we can now add the total of expenses, and we are going to put it here. We are going to put it here, the total for expenses. We add 350 plus 350 plus 1,200 plus 300 plus 750. Then the total will come here is 2,970. Sorry, 2,950. And then we are subtracting expenses from the figure that we got for our income. So we are saying income minus expenses. So when we say income minus expenses, then remember for income we got 17,210. Then we subtract 2,950 there. Then we get our figure here. We put our answer here, which is 14,260. So this is what we have. And this figure is a positive figure. So what does it mean? It means we are having a surplus of income over expenditure. Surplus of income over expenditure, since we are having 40,260. Then at the opposite, if we got a negative, it was going to be a deficit of income over expenditure. So this is what we have, guys, in terms of this question 6 on the question paper of 2021. We were required to prepare the trading account, tax of trading account, and then subscription fees account. And then lastly, we were supposed to prepare the statement of profit and loss. So 30 marks on this question. Hopefully this video was helpful. Those who haven't subscribed, please subscribe and share. We'll meet again in the next video. Let's get notified. As for this video, I'm signing out.